Okay, welcome back to chapter 22. We are on page 6 and we are going to do example 1, Eastern Window Product. Okay, so here's a question. I'm actually going to change the dates. I've got it for 2017, so let's put 2016 here and 2017 here. Sorry, I couldn't edit that picture, and I really like this question. Okay, so let's see how this works, how to go through a question. And as I said, investing and financing you've already done. The new part is operating. So what I like to do is kind of go through down here and tell which section this stuff goes into. So cash is going to go at the bottom of the statement. Now remember, in operating, let's just do a little summary. Operating is current assets, current liabilities, and the income statement. Investing is long-term assets. And financing is long-term liabilities, notes payable, and shareholders' equity. So that's pretty much how we're going to break it down. So going back to here, cash goes at the bottom because that's what we're trying to. Accounts receivable is a current asset, so it goes in operating. The change, notice this is the change between the two. Always remember they put the newest date here and then the older one. So inventory, so it's in operating. Prepaid expenses is also in operating. Land is a long-term asset and it goes investing. And notice it increased. So obviously there's going to be at least one purchase, but there might also be a sale. We'd have to read more. Buildings also went from 0 to 200,000, so that also must be a purchase, and it's going to be an investing. And accumulated depreciation. Now, with that, we don't use it unless we need it for a calculation. Okay, equipment, 5,000 increase, so there's at least a purchase, but as we saw in the example 2 we did in the last video, there could be a purchase and a sale. And again, we don't use accumulated depreciation unless we need it for a calculation like we did in example 2. Okay, down here, accounts payable is operating because it's a current liability. Income taxes payable is operating because it is a current liability. Salary and wages payable is in operating. Then we've got mortgage payable and bonds payable. Those go in financing. And mortgage payable went up, so that should be a source of cash. And bonds payable went up, so that should be a source of cash also. But always remember to look at the different additional information at the bottom of the question. Common shares went up. We probably issued shares. They also go in financing, and they're going to be a source of cash. Now, retained earnings, the pieces. One is net and one is dividends. So, if you can see from here, net income is 59,900. So that's our net income. So that's 59,900. Now, on this question, it tells you the dividends were 8,000. So we'd put 8,000 here. And notice if you add these two together, you get the $51,900 increase. Sometimes they don't tell you how much the dividends are. I'm just going to answer that phone.